Global Market Update, the 4th of July 2026. Global markets ended the first week of July on a mixed but resilient note as investors weighed softer U.S. economic data, changing interest rate expectations, geopolitical risks, and developments in the technology sector. Ahead of the U.S. Independence Day holiday, the Dow Jones Industrial Average closed at another record high of 52,900.07. Markets were supported by weaker than expected U.S. non-farm payrolls data, which showed only 57,000 jobs were added in June, well below expectations of 100,000. The softer labor market reduced expectations of an immediate U.S. Federal Reserve rate hike, boosting investor sentiment. Technology stocks remained under pressure despite the broader market gains. Investors continued to reassess whether the heavy spending on artificial intelligence infrastructure and data centers will deliver sufficient near-term returns. Nvidia and Micron Technology were among the major companies to record notable losses. Asian markets rebounded strongly on Friday following earlier weakness. South Korea's Kospi index surged 5.8%, driven by strong gains in Samsung Electronics and SK Hynix, while Japan's Nikkei 225 rose 1.5%. The World Bank also revised its 2026 global growth forecast lower, reducing expected GDP growth from 2.8% to 2.5%. The downgrade reflects persistent geopolitical uncertainty, particularly in the Middle East, where disruptions to energy supply chains continue to pose risks to the global economy. Brent crude is trading around $72 per barrel, supported by a temporary diplomatic framework aimed at keeping the Strait of Hormuz open. However, the World Bank warned that a prolonged disruption could see oil prices average $115 per barrel, reducing global growth to as low as 1.3% next year. A longer-term trend gaining momentum is the shift from just-in-time supply chains to a more resilient, just-in-case model. Businesses are increasingly investing in regional manufacturing, larger inventories, and diversified supply chains to reduce exposure to future disruptions. Corporate activity also remained in focus, with German industrial group Continental agreeing to sell its ContiTech plastics and rubber division to Lone Star Funds for €4 billion. The company plans to concentrate on its core tire business while returning approximately €2.5 billion to shareholders. Meanwhile, Egypt is expected to receive the next €1.5 billion tranche of European Union financial assistance under a broader €7.4 billion support package aimed at strengthening economic reforms and fiscal stability. Looking ahead, the International Monetary Fund continues to highlight the growing role of digital finance. New policy papers released this week point to asset tokenization and commercial bank deposit tokens as key building blocks of future cross-border payment systems and global liquidity management.